Imagine a world where your money isn't controlled by banks, but by you. Picture a financial landscape where every transaction is transparent, secure, and immutable, leaving no room for manipulation or deceit. This is the promise of Bitcoin, a revolutionary form of currency that challenges the very foundations of traditional financial systems. While banks have long acted as gatekeepers, controlling access to your funds and dictating the terms of your financial interactions, Bitcoin offers a radical alternative. It eliminates the need for intermediaries altogether. In this decentralized realm, individuals can transact directly with one another, fostering a new level of financial freedom. The core of Bitcoin's innovation lies in its transparent ledger of transactions, known as the blockchain. Each transaction is recorded in a manner that anyone can verify, ensuring that the integrity of the system is maintained without the oversight of a central authority. This contrasts sharply with traditional banking systems, where transactions are often shrouded in secrecy and discrepancies can go unnoticed. Imagine trying to access your bank account, only to find that your funds have been frozen due to a regulatory issue, or worse, a glitch in the bank system. Such vulnerabilities highlight the risks inherent in centralized financial institutions where power is concentrated in a few hands. Bitcoin, conversely, distributes that power across a network of users, each playing a role in maintaining the system's integrity. This shift not only enhances security, but also democratizes access to financial services. Consider the implications of a system where individuals in underbanked regions can participate in the global economy without the barriers imposed by traditional banking. In many parts of the world, access to banking services is limited, leaving millions without the ability to save, invest, or conduct basic transactions. Bitcoin transcends these limitations, providing a financial lifeline to those who have been excluded from conventional banking systems. But the allure of Bitcoin extends beyond mere accessibility. It embodies a fundamental rethinking of trust. In a world where trust is often misplaced, whether it's in a financial institution, a government, or a corporate entity, Bitcoin offers a new paradigm. Trust is built into the protocol itself, embedded in the very code that governs the network. Each transaction is cryptographically secured, and once recorded, it cannot be altered or deleted. This creates a level of accountability that is often absent in traditional finance, where mistakes or fraud can lead to significant losses without recourse for the average consumer. Yet as we explore the transformative power of Bitcoin, we must also acknowledge the challenges it presents. The environmental concerns associated with mining and the potential for misuse highlight the complexities of this new financial frontier. However, these issues do not negate its foundational role as a protocol for financial accountability. Instead, they present opportunities for innovation and improvement, encouraging developers and users alike to refine and enhance the system. As we stand on the precipice of this financial revolution, it is essential to recognize the profound impact that Bitcoin can have on our lives. By decentralizing money, we are not merely creating an alternative to existing systems. We are redefining the very nature of financial interaction. The question now is not whether we should embrace this change, but how we can do so in a way that maximizes its potential while addressing its challenges. As we continue this journey, we will delve deeper into the mechanics of blockchain technology, the backbone of Bitcoin and other decentralized applications, and explore how these innovations are reshaping not just finance, but society as a whole. Imagine a world where every time you made a transaction, it was not only recorded but also accessible for anyone to verify. What if you could see a clear record of every exchange, ensuring that no one could alter the details without consensus? This is the essence of blockchain technology, a system that underpins not just Bitcoin but a myriad of decentralized applications that hold the potential to transform how we interact with one another and with our financial systems. At its core, blockchain serves as a public ledger, where each transaction is a block in an ever-expanding chain. Once added, these blocks cannot be changed, creating an immutable record that fosters trust and accountability, qualities often lacking in centralized systems. Think of it like a neighborhood book club where each member holds a copy of the same book. Instead of one person deciding what gets added or removed, everyone has a say, and any changes must be agreed upon by the group. This decentralized nature not only democratizes control, but also enhances security. In a traditional bank, your data is stored in a single location, making it vulnerable to hacks or breaches. In contrast, blockchain disperses data across a network of computers, known as nodes, making it exceedingly difficult for a single entity to manipulate or steal information. Each node verifies the transaction independently, adding layers of security that traditional systems simply can't match. As we explore the broader implications of blockchain, it becomes clear that this technology can extend far beyond cryptocurrency. Imagine decentralized applications, or DApps, that operate on blockchain. These applications, governed by smart contracts, can automate processes and execute actions without the need for intermediaries. Picture a scenario where a farmer can sell produce directly to consumers through a decentralized marketplace, with each transaction automatically recorded on the blockchain. No middlemen are needed, reducing costs and increasing profit margins for the farmer while providing consumers with fresher options. This is just one example of how blockchain can reshape various sectors, from finance to healthcare, by allowing individuals to engage with services without a central authority controlling the process. As we consider the implications of decentralized applications, we begin to see a shift in power dynamics. Individuals can choose which services to utilize and how their data is handled, fostering a sense of autonomy in a world often dominated by large corporations. This choice represents a profound shift from traditional systems where individuals often feel trapped in a web of regulations and fees with little control over their financial journeys. The promise of blockchain lies not only in its technical prowess, but in its potential to empower users. By decentralizing data storage and enhancing security, blockchain technology paves the way for a future where trust is built into the very fabric of our transactions. As we continue this exploration, we will delve deeper into the potential of decentralized applications and the transformative power they hold for our financial systems and society at large. Imagine a world where the services you rely on, be it banking, voting, or even healthcare, function without a central authority dictating the rules. What if you could engage with these services directly, holding the keys to your own data and transactions? This is the potential of decentralized applications, or dApps, built on blockchain technology. With the principles of Bitcoin laying the groundwork, we now turn our attention to the broader implications of blockchain beyond just currency. Decentralized applications are not merely a technological advancement. They represent a paradigm shift in how we organize and operate our societies. These applications leverage the transparency, security, and immutability of blockchain to create systems where users have unprecedented control and insight. Consider the world of finance, where traditional banks often act as gatekeepers to your money and personal data. In contrast, decentralized finance, or DeFi, offers a suite of applications that allow users to lend, borrow, and trade without the need for intermediaries. These applications automate processes through smart contracts, self-executing agreements coded into the blockchain that operate when predetermined conditions are met. This means, for example, that you could lend your cryptocurrency and receive interest automatically without waiting for a bank's approval or intervention. The transparency of blockchain allows all participants to verify transactions, ensuring that everyone plays by the same rules. Yet, the potential of decentralized applications extends far beyond finance. Imagine a voting system where every vote is recorded on a blockchain, making it nearly impossible to tamper with results. This could enhance trust in democratic processes, allowing citizens to engage in governance with confidence that their voices are accurately counted. Or think about supply chain management. Decentralized applications could provide real-time tracking of goods, enabling consumers to verify the origins of products and ensuring ethical sourcing. In healthcare, dApps could empower patients to manage their medical records securely, granting access only to those they choose, thereby safeguarding their privacy while facilitating better care. The beauty of these applications lies in their ability to automate processes, reducing the need for intermediaries and consequently lowering costs. They can streamline operations, increase efficiency, and provide a level of transparency that traditional systems often lack. However, this shift also raises essential questions about trust and governance. As we transition from centralized authorities to decentralized networks, who will ensure accountability and fairness? How do we navigate the complexities of user rights and responsibilities in a landscape where control is distributed rather than concentrated? These are not just technical challenges, they are societal ones that require careful consideration. The transformative power of decentralized applications is evident, yet it is crucial to approach this new frontier with a balanced perspective. As we embrace the potential for increased autonomy and transparency, we must also remain vigilant about the implications of such a shift. The transition to decentralized systems offers a unique opportunity to rethink our relationships with institutions and with one another. It invites us to consider a future where we are not merely subjects of governance, but active participants in shaping the systems that govern our lives. As we explore the concept of smart contracts in the next segment, we will see how these automated agreements can redefine our interactions with financial systems and beyond, allowing us to reclaim agency over our choices and futures. The promise of decentralized applications is not just a technological innovation. It is a vision for a more equitable and participatory society. Imagine standing at the edge of a bustling marketplace, where every transaction is not only visible, but also automatically executed without the need for intermediaries. This is the essence of smart contracts, a revolutionary concept that transforms agreements into self-executing code, freeing us from the constraints of traditional contractual processes. When we talk about smart contracts, we're not merely discussing a digital replacement for paper agreements. We're diving into a realm where trust is embedded in the technology itself. Instead of relying on a third party like a lawyer or notary, smart contracts operate on a blockchain, executing transactions automatically when predefined conditions are met. Picture this: when you buy a house, the smart contract could manage the entire process. It would ensure that funds are transferred only when the property deed is verified and conditions are fulfilled, all without needing to engage a real estate agent. This level of automation not only expedites transactions, but significantly reduces costs by cutting out unnecessary middlemen. Now let's unpack how these smart contracts function. At their core, they are algorithms that live on a blockchain, an immutable digital ledger that records all transactions transparently. The beauty of this system is that it operates on consensus, meaning that all parties involved can independently verify the conditions and the execution of the contract without ambiguity. For example, if you were to enter into a contract that stipulates payment upon delivery of goods, the smart contract could be programmed to release payment only when a trusted source confirms that delivery has occurred. This not only enhances security, but also instills confidence among all parties involved. In stark contrast to traditional contracts, where ambiguity and the potential for dispute often linger, smart contracts offer clarity and precision. They eliminate the need for lengthy negotiations and the potential for human error. Imagine a world where contractual obligations are fulfilled automatically. Not only does this streamline processes, but it also fosters a culture of accountability and trust. Moreover, because these contracts operate on decentralized platforms, they are less susceptible to fraud or manipulation. The system becomes self-regulating, as all actions are logged and can be audited by anyone at any time. However, one might wonder, what about the complexities of legal language and the nuances of human interpretation? This is indeed a valid concern. While smart contracts excel in clear-cut scenarios, the challenge remains in translating intricate legal terms and conditions into code. Nevertheless, as technology evolves, so too will our ability to create more sophisticated smart contracts that can address these complexities. The implications of adopting smart contracts extend far beyond individual transactions. They open the door to innovative financial systems where individuals can opt into services that align with their personal values and needs. For instance, consider a business that utilizes smart contracts to automate employee payroll and bonuses based on performance metrics. Rather than relying on subjective evaluations, the system can objectively assess contributions and execute payments accordingly. This not only enhances fairness, but also motivates employees to perform at their best, knowing their compensation is directly tied to their output. Ultimately, smart contracts represent a pivotal shift in how we approach agreements and transactions. They embody a vision of financial systems that are not only more efficient, but also more aligned with individual empowerment and choice. As we explore the practical applications of these contracts in real-world scenarios, we will see how they can redefine our interactions with financial systems, paving the way for a future where transparency and trust are the cornerstones of our economic landscape. What if your employer could automatically distribute raises based on performance metrics? Imagine a workplace where your hard work is recognized in real time, without the need for annual reviews or bureaucratic delays. This is not just a futuristic concept. It's a tangible application of smart contracts in the business world. Smart contracts can automate payroll processes, ensuring that employees are compensated fairly and promptly based on predefined criteria. For instance, a company could set up a smart contract that monitors sales performance. Once a salesperson exceeds their target, the smart contract triggers an immediate bonus payment, reflecting their success without requiring managerial approval or administrative overhead. This level of automation not only boosts employee morale, but also cultivates a culture of accountability and transparency in compensation. Now, let's take a look at how governments can harness the power of smart contracts to offer opt-in services that enhance citizen engagement. Picture a scenario where citizens can choose to participate in specific government programs, such as social welfare or public health initiatives, through smart contracts. By opting into these programs, individuals can receive personalized services that align with their needs and preferences. For example, a smart contract could be designed to provide healthcare benefits only to those who actively participate in preventive health measures, such as regular checkups or vaccinations. This approach not only incentivizes healthier lifestyles, but also optimizes resource allocation within the public sector. Moreover, consider how land registries are evolving through the implementation of smart contracts. In many countries, the process of buying and selling property can be riddled with paperwork, delays, and potential fraud. However, by utilizing smart contracts, property rights can be securely transferred on a blockchain, ensuring an immutable record of ownership. When a buyer and seller agree on a price, the smart contract automatically executes the transaction once certain conditions are met, like the transfer of funds and the signing of documents. This streamlines the entire process, minimizes disputes, and enhances trust among parties involved. In the world of finance, smart contracts can also facilitate peer-to-peer lending platforms. Imagine needing a loan to start a business, but instead of going through a traditional bank, you can connect directly with individuals willing to lend. Through a smart contract, terms such as interest rates and repayment schedules can be automatically enforced, ensuring that both parties adhere to their commitments. This not only democratizes access to capital, but also allows for lower fees, ultimately benefiting both lenders and borrowers. As we delve deeper into these practical examples, it becomes evident that smart contracts have the potential to revolutionize not just financial transactions, but the very fabric of our interactions with institutions, be they private or public. They embody a shift towards a more participatory and transparent system. Individuals no longer need to rely solely on intermediaries or traditional bureaucracies. Instead, they can engage directly with the systems that govern their lives, making informed choices based on their specific needs and preferences. The implications are profound. When we empower individuals to opt into financial and governmental systems that resonate with their values, we foster a culture of engagement and responsibility. This transition from a coercive to an opt-in financial landscape not only enhances trust, but also aligns the systems we interact with to our personal and societal goals. The future is not just about technology. It's about reshaping our relationship with money, trust, and governance. As we continue to explore the societal implications of smart contracts, we will see how they can ultimately pave the way for a more equitable and participatory society, where individuals can choose the programs and services that best serve their interests. Imagine a world where you have the power to select which government services you want to engage with, rather than being compelled to accept a one-size-fits-all system. Picture yourself navigating a marketplace of governance, where each service operates transparently and efficiently, designed to meet your needs rather than dictate them. This is not merely a thought experiment, it is the potential reality that smart contracts offer us in reimagining our societal structures. By leveraging the principles of automation and transparency embedded in blockchain technology, we can create a landscape where individuals actively choose the services and financial systems that align with their values and needs. This transformative potential fundamentally challenges the traditional paradigm of governance, where citizens often feel like passive participants in a system that does not cater to their unique circumstances. Smart contracts at their core are self-executing agreements with the terms of the agreement directly written into code. They eliminate the need for intermediaries, which not only streamlines processes, but also enhances accountability. This shift can lead to more participatory governance, where people can opt into various programs and services based on their preferences. For instance, consider a decentralized healthcare system where individuals can choose their providers and pay for services as needed, rather than being bound to a specific insurance plan that may not meet their health needs. With smart contracts, payments could be automatically released upon the completion of a service, ensuring that providers are compensated fairly, while patients only pay for what they choose to use. This model of opt-in governance extends beyond healthcare. It raises profound questions about how we interact with our governments and the services they provide. Imagine if you could select a public safety service that prioritizes community engagement and responsiveness, or a transportation service that is environmentally sustainable and efficient. The essence of this shift is that individuals would no longer be passive recipients of government services. Instead, they would become active participants, choosing the systems that resonate with their values and priorities. However, this vision does not come without its challenges. The idea of customizable governance raises questions about equity and access. If individuals can choose their services, how do we ensure that everyone has the ability to make informed choices? There is a risk that those with more resources may be better positioned to navigate this landscape, potentially widening gaps in access to essential services. Therefore, it becomes crucial to create a framework that supports informed participation and equitable access for all citizens. The implementation of smart contracts and governance also invites scrutiny regarding accountability. If a service fails to meet expectations, how do we hold the creators of the smart contract accountable? Unlike a traditional governmental structure, where there may be avenues for recourse, in a decentralized environment, accountability mechanisms need to be explicitly defined. This adds a layer of complexity to the design of smart contracts, as they must not only facilitate transactions, but also ensure that service providers maintain a standard of quality that benefits the community. As we contemplate the future shaped by smart contracts, we must also consider the emotional stakes involved. The idea of choosing our financial systems and government services evokes a sense of empowerment and agency. It speaks to a deep-seated desire for control over our lives and the systems that govern us. The prospect of a more equitable and participatory society, where transparency and choice are paramount, is not merely a technological advancement. It is a fundamental shift towards a more just and responsive governance model. In this landscape, the role of trust evolves. Trust becomes embedded in the code of smart contracts as the terms are executed automatically and transparently. This reduces the reliance on traditional institutions that often have historical legacies of mistrust. As we embrace these innovations, we are tasked with ensuring that the systems we create uphold values of inclusivity, accountability, and responsiveness, fostering a society that not only allows for individual choice, but also promotes collective well-being. The transformative potential of smart contracts is not just in their technological prowess. It is in the possibility of designing a future where governance and finance are aligned with our individual and communal aspirations.